Hey traders, checking in on the stock market today. Fear out there in the broader market in response to the FOMC minutes and tapering. We got the bear signal that I've been talking about for months that we haven't seen in a while, and we'll point out some key levels on our major sectors that are going to let us know, are we in for longer term consolidation, or are bulls going to step in and try and buy this dip yet again? So starting off on the S&P 500 futures chart, this is an uptrend resistance line that we've been keeping an eye on. And here is a key uptrending support line. And if we want to bring it back here and include this further down level, then it has a little bit more of an ascending wedge type feel to it. The problem with using that anchor is we skip all this price action. Really what it boils down for me on SPY is going to be the weekly EMA 12. Because the weekly EMA 12 has been holding as support for the last 8 months. And that level right now is down in the 433s, and if we drop down towards that level, it'll be in the 432s. So that is essentially 1.5% plus from where we stand right now. So that level is potentially coming into play this week. The question is, do we bounce off that level for a 12th time, however many times it's been? Or do we lose that level and start monthly consolidation? As I've been saying recently, and really I started last week really honing in on the fact that SPY has not consolidated on the monthly time frame in over 9 months. So that has had me cautious going bullish. I was a week and a few days early, and that's something that I'm getting used to now, where I'm a week to 2 weeks too early in my bigger picture outlook of things. But is this monthly consolidation shaping up? And the response to the weekly EMA 12 is going to answer that question for us as far as SPY is concerned. So what information can I utilize as well historically? So technical analysis is great for looking at historical levels and getting information. So looking at the S&P 500 futures chart, the 12-hour RSI, the last few times we've bounced off of weekly EMA 12 support, look at the 12-hour RSI. It got down to 27, and that was our weekly high or low. It got down to, let's see, at the low of the candle was probably a little bit lower. It got down just above, we'll say it got down to 31 or 32. That was a weekly high or low. And then here it got down to 32, 33. That was our weekly high or low. So here we are with a 12-hour RSI of 39. I round with the RSI. So we're at 39. So we can drop another 1.5% plus. That 12-hour RSI will be approaching our lows where we have bounced historically. Notice the RSI is in an uptrend. It was the deepest dip, then it was less significant, then it was less significant. So if the bulls are going to buy this dip and have us say, well, back in control yet again, what I would want to see is weekly EMA 12 hold, RSI not dip down under 35 on the 12-hour time frame with where the candle closes. Keep that RSI in an uptrend on those higher lows. And that's what I'm watching for the rest of the week. So because these are 12-hour candles, we only have a few more candles this week to go. And you can see that it's not just waterfall drops that get us down there. Sometimes it is bear flags as well. So this can obviously go into next week as far as what we're watching on weekly EMA 12 support. So that is going to be key. I'm watching 12-hour RSI. I'm watching weekly EMA 12 on SPY. And we're watching the hourly downtrend. We know the next time we bounce, because of the size of this pullback, we're just looking for hourly lower highs. So for SPY, anything under 444, well actually I would use this level, 444.19, just an hourly lower high. We ended yesterday's video talking about, can the bulls confirm hourly trend changes? And the answer today across the board, aside from some growth names, was no. Bulls couldn't do so. QQQ came really close. We'll look at that in just a second. This was the pattern we were watching on the NASDAQ futures from yesterday. We bounced significantly off support, and then we just rolled over and busted through that support level. So on QQQ, weekly time frame, consolidation is underway. Anything above 352.04 is a weekly high or low. And our last daily high or low was 362. So there's a couple little support levels in here, but at this point, because of the size of the drop, I'm more interested in the weekly uptrends. Can bulls maintain weekly uptrends, or does monthly consolidation begin? So for QQQ, I'm looking at 352.04, which is about 3% to the downside or so. And we can see the hourly time frame was set up for a trend change today, an attempt, I should say. So we started the morning with a It's a very uneventful morning, very slow. Generally, we don't see a massive reaction to the FOMC minutes in the broader market, but today was an especially slow day, and the tighter the range heading into something like the FOMC minutes, the more of a reaction you're going to get, in my opinion. But we started with a little bit of weakness. This was the bulls attempting an hourly higher low on QQQ, and we ran up to the high of the day on the initial reaction of the minutes, and we rejected by 21 cents. Had we broken the high of the day, that would have been an hourly trend change confirmed to the bulls, and that would have been notable. We rejected, straight drop to the low of the day. We then had a lower high, and then we waterfall dropped with increasing fear into the end of the day, increasing bear volume. We're down even further here after hours, and we got our bear signal. What was the bear signal? We've been waiting for this, talking about it for a long time. All three of our major sectors at the low of the day at the same time: financial sector, healthcare sector, and QQQ. And it happened in the last 45 minutes, 40 to 45. Nope, it happened in the last 15 to 20 minutes of the trading day. For me personally, I took a no trading day. And that's because I've been dealing with flooding, and you'll see at the end of this video what I'm talking about. But I was still at the computer for a good chunk of today. And of course, the signal I've been waiting for over a month for to go aggressively short, it happens in the hour and a half where I'm not at the computer today. It's just the way it goes. I do have SPXS exposure in a hedge position that's just been slowly grinding down as the market slowly grinds up. But I would have gone a lot more aggressive, bearish, than the exposure that I currently have. It's just the way that it goes. Again, it's money left on the table, so it's not like I blew up a position or anything, but a little frustrating. That's just the way it goes. Have to accept that that's part of the game. So we're looking for hourly lower highs to be the result of the next bounce. If we see gap down opens, we're going to be watching what our futures RSI levels are at. We're going to be cautiously looking for bounces. And then again, those bounces, just looking for hourly lower highs with lots of space for them to form. So the next couple days, it's all about our longer term weekly support levels and whether they're maintained or not. And the VIX is at a key level. This is the weekly falling wedge that we've been watching. And here we are, right at resistance. Let's see how this weekly candle closes. We can get above it. We've gotten above it many times. It's how we close. So by the end of the day, Friday, do we close convincingly? It has to be convincingly above this trend line, because I can always just tweak it a little bit and it's still the same trend line. So the question will be, do we convincingly break out? For me, a convincing breakout would be over 25.09, clearing the price level. If we break 25.09 before the end of the week, that's very notable. But this falling wedge is shaping up for a bull break attempt. Watching very close. Longer term weekly levels are now my focus. And if I'm day trading, I'm looking at the hourly time frames. And again, knowing we're just looking for hourly lower highs. Financial sector. That's the other thing. So we're not in complete fear mode. Yes, we had notable fear into the end of the day, but two of our major three sectors, QQQ is in a daily downtrend, and we're getting follow through now into weekly consolidation, lower high and lower low. But our other two major sectors, the financial sector is in a daily uptrend still. Anything above 36.12 is a daily high or low. The retracement size is becoming significant enough where even if we do set a daily high or low, we're then going to be watching for a lower high to form. But there's no major red flag on the XLF daily chart right now. And if you show me this chart by itself, I would say, yep, a little more of a pullback than the bulls would like. It's not a daily bull flag anymore, but there are no red flags. Close at the low of the day shows bearish momentum. So if we're going to see SPY showing us that a loss of the weekly EMA 12 into monthly consolidation is shaping up, we're going to have to see eventually the financial sector confirm a daily downtrend. And the healthcare sector is the same thing. There are no red flags on this healthcare sector chart whatsoever. We're coming from an all-time high, and anything above 131.71 is a daily high or low. We're in an uptrend. Coming off the all-time high, one day off the all-time high. So if we're going to see SPY head to and lose weekly EMA 12 into monthly consolidation, we have to lose the daily uptrend in XLF and in XLV. And that's not close to happening right now unless we see another 2% plus drop in both of these names. So it's definitely the most significant weakness in the broader market that we've seen in a couple weeks. You know, this drop was more significant. 4% drop in 4 days, just under a 4% drop in 4 days. And here in 2 days, we've got almost a 2% drop. So we would have to drop twice as much in the next 2 days to match the last weekly consolidation, which just V-shaped to a higher high. So again, I'm not ready to say the roof's on fire and the market's collapsing. We're definitely paying extra attention now that we're getting these signals that are firing off. But I have to see XLF and XLV lose daily uptrends. So you can have game plans established. At this point, if you're looking bearish, you're already in bearish positions ideally. But bulls can be looking to buy dips for a weekly higher low on SPY. Just have to have stop levels. We're not going to just try and catch a falling knife, and then if it ends up it is monthly consolidation, we're left holding the bag. That's not how we trade. You have to establish a clear risk and reward, but aggressive bulls are going to be watching for weekly higher lows for potential entries. One thing that I'm watching for entries at this point, and I've mentioned it recently, is the marijuana sector. The reason, I've been trading this sector for 11 years now, and it's very seasonal. The voting season into the fall into November is seasonally easy money. It has been. Not every single year, but certainly more often than not. It's a very clear pattern. And again, because when we get to voting season, you got this state doing this state's got this ballot initiative, and the headlines are coming out, and it's being talked about a lot more. And I talked about recently how I'm not comfortable going long the MJ sector if SPY is not consolidating. But now that SPY is pulling back, what I want to see is either a weekly higher low on SPY or a monthly higher low. If SPY needs a bigger pullback, that's fine. I'll patiently wait and look for a monthly higher low. But when the dust settles and either our weekly or monthly higher low is set on SPY, keeping in mind that on SPY, anything above 319 is a monthly higher low, which means we can pull back 30%, 25%, and still be in a monthly uptrend. My point is, once the dust settles and we set a higher low on one of these longer term time frames, that is the best time to buy this MJ sector, in my opinion. Because those will be, the MJ sector is not going to be immune to the broader market dropping, but once the broader market establishes, just like COVID, the MJ sector dumped in COVID, during COVID, even though, it was the dispensaries were labeled as essential businesses that were going to stay open, the fundamentals didn't match. The MJ sector is dumping, COVID's not hurting the MJ sector fundamentally, and it was the broader market dumping that just took everything with it. And then once the SPY hit that bottom, MJ sector exploded to the upside as far as hundreds of percent gains, far exceeding the broader market. I'm watching for a bottom in the broader market for a weekly or monthly higher low to be the best time to buy the MJ stocks into the voting season. And MSOS today started its daily bounce, and it actually held on well into the end of the day. It did not respond significantly to broader market weakness. This ETF, which has been dumping while SPY has been strong, was up 1.75% today at the close. So we're just looking for a daily lower high to be the result of this bounce. But again, I am watching close for everything I just said. Not going to repeat myself again. But this is the sector I'm watching for dip buying opportunities into the fall. More beat up, the better. If SPY wants to see a monthly higher low, dump 10%, great. Crush these names, great. I want everybody on one side of the boat. I want everybody bearish. And then I want the scales to tilt. And for that to be the entry opportunity for the fall. So I'll be covering that over the next couple months. Dollar. So dollar's on the verge of a weekly cup and handle breaking out. We broke one resistance level today, the double top at 93.19, and now it's all about 93.44 because if that level breaks, it's a confirmed monthly trend change to the bulls with a higher low and a higher high. So key resistance level, if you're a market bear, you want the dollar strong. You want the dollar to break 93.44 and break out above that level. And as far as the daily is concerned, we had that uptrend line that I just deleted to be watching as a support guide, or just price levels. Anything above 92.47 is just a daily higher low. Bulls have to break 93.44 without losing the daily uptrend. Gold held on real well. We confirmed a 4-hour downtrend with zero follow through. What does that mean? Zoom out for the potential of a bull flag. That's a possible daily bull flag. Broader market dump did not hurt gold. Here's the reaction to the minutes, and then we just traded sideways while things dumped. So gold is a possible bull flag. That would be a great sign for the bulls overall. It would increase the probabilities that the monthly double bottom can hold. And I am going to be looking for a re-entry. I wanted more consolidation than this, obviously. So I'm going to remain a bit patient. Wait for the trade to come to me. And if it doesn't, that's A-okay. There's plenty of things to trade out there. The miners confirmed the bear flag on the daily and closed weak. So again, the miners have been showing us considerable weakness comparative to gold. Silver is also much weaker than gold. This dump today, you can say, well, it's because the broader market dumped and miners are traded on the broader market. And there's definitely correlation there. But even before we saw broader market weakness the last 2 days, the miners were weaker than gold on that bounce. So keeping an eye on that relationship. And the next support level for GDX is 30.64, and that's the lowest price in many months. And that's the lowest price we've seen in how many months? April 20? So over a year, 16 months. All about 30.64 from here. Oil confirmed a weekly downtrend. I'm on to the next futures contract here, October, because the volume rolled over. Weekly lower high and lower low confirmed. That's another point in favor of the bears. Monthly consolidation is underway for oil. Does that mean monthly consolidation for the broader market? We'll have to see. Bears want to control the hourly downtrend from here for the rest of the week. For every oversold bounce. We will see oversold bounces along the way. Bears just want to see an hourly lower high and a drop to a lower low. That will keep their control for the week, and that will ensure that the VIX closes strong. If SPY changes the hourly trend to the bulls before the end of the week, the VIX is going to have an upper wick rejecting from my downtrend resistance line, and we're going to be watching, hey, maybe this is just a weekly high or low. So I'm watching XLV and XLF very closely. Do their daily charts set higher lows, or do they free fall and accelerate this move to the downside? Things are getting exciting. I know a lot of you acted on seeing all those sectors dropping to the low of the day at the same time. And there was one trade. I didn't take any trades today. Like I said, again, discipline, very clear. I'm dealing with a flood, as you'll see, and I am not trading today because I am not in my ideal scenario. But QQQ, I was watching the reaction to the FOMC before it got massive. And there were signals. When volatility picks up, there's signals on the 1 minute time frame for day traders. And just looking at the signal here, it got ugly. And we just dumped. And I'm just watching the pattern of a lower high every 1 minute candle. 1, 2. I'm not watching for it here because this isn't significant. But once it gets significant, 1, 2, 3, 4, 5, 6, 7, 8 candles with a lower high every candle. This was a double top. As soon as that breaks, bulls go long. And you put your stop under the low. So let's just do hypotheticals. Double top breaks at 364.27. Let's say you get filled at 364.30. Your stop goes under 363.90. You're risking 40 cents. And the reward, if you held it that long, I probably sell half initially. I'm in a risk-free trade. And then I exit the other half heading up into resistance. But then you have the same trade in the other direction. And in the chat room, I laid out a hypothetical trade because I wasn't trading. But it was, okay, now let's watch the pattern in the other direction. Higher, low, every single 1 minute candle. That pattern is lost at 365.71. If you short there, let's pull up. No. I was going to say I pull up the chat room, but short there, 365.71. I put my stop over 366 psychological, so 366.01. So I'm risking 35 cents, let's say. And in my hypothetical trade in the chat room, I said I would be out at 365.37 because that would allow me risk-free. I'm out half. I keep my stop over 366. I can't lose on the trade. And then, of course, from there, we rolled over, and the second half of the position would have followed through in a big way. Long story short, if you are a day trader and things get massively volatile, you can use 1 minute candles with that pattern in both directions as signals. And then have tight stops right when they change. Only when there's high volatility. On a normal day, you're going to get chopped to bits if you try that. But when there's massive ranges, that's a nice signal. And I've been exploring that more this year for the first time. Never used to be on the 1 minute charts. But when you got massive volatility, there are some nice signals on the 1 minute. Don't forget to do good things. I appreciate you watching. Like and subscribe. Thanks for tuning in. Let's see those weekly charts. Key support, EMA 12, daily uptrends in XLF and XLV. Does fear last into the weekend, or can bulls save the day again? It's going to get interesting. Have game plans established for both. You can have a shopping list of bulls that you want entries on. Ideally, names looking for weekly higher lows. But make sure you have a game plan for if fear magnifies and snowballs and things get excessive and we end up with a 10% pullback in the market. Definitely want to be bearish. One way that I would potentially do it is if I have bearish swing positions now, and say we gap down open tomorrow, maybe I don't want to exit those bear positions because I know we're just looking for an hourly lower high, but I look to day trade bounces so that if we do bounce, I make money on the day trade to offset the losses of my swing trade bear. And then once we set an hourly lower high and drop back down again, my swing trade then starts to help my account go up. So that's one way to not try and exit a trade too early. Try and let it run by taking other positions in other trades. And I find that that personally helps me if I want to hold a swing trade longer. All right. See you soon.